the franchisees are making money on the bottom line and the franchisors are making their money on the top line. So those are competing factors just by nature.
You're listening to RevOps Champions, a podcast created for B2B leaders to help you align your people, streamline your processes, trust your data, and leverage technology in order to grow your business. Hello and welcome back. Today I'm joined by Michael Iannuzzi, partner and franchise practice leader at Citron Kruperman, where he advises franchise brands, multi-unit operators, and growing businesses on financial strategy, operational performance, and scalable growth. Michael brings deep expertise in franchise accounting, advisory, and business operations, working closely with franchisors and franchisees across a wide range of industries. His work focuses on helping organizations navigate growth with stronger financial visibility, operational discipline, and long-term strategic planning. In addition to leading Citron Kruperman's franchise practice, Michael is recognized within the franchise industry for advising brands on growth readiness, profitability, benchmarking, and operational alignment across franchise systems. Michael, welcome to the RevOps Champions podcast.
Brendan, thank you so much for having me, and thank you for that kind intro.
Well, it's all fact, right? It's all facts. We make sure we fact check everything nowadays.
Yes, thank you.
Michael, you work with franchise brands at many different stages of their growth. What separates organizations that scale profitably from those that struggle operationally as they expand?
Yeah, great question. And franchising, this is what it's all about, right? Scaling, growing, multi-unit operations with not having to scale with as many people. The ones that do it the best way, they are really into systems. Doesn't have to necessarily be an IT system, but they're into systems of the brand. Like, how is my supply chain set up? How am I collecting data from the franchisees? When I collect that data, what am I doing with it? Do I have field consultants advising the franchisees on profitability? When I'm going into new markets, what type of products am I testing? What type of services am I testing? They're really into the brand, the system, and making sure that their franchisees are profitable and that they're making money and that they will buy more. And to me, I'm very big on the data collection from the Z's. We have to help them with their business, and the franchisors know it the best. And the more ammunition they have to feed back out to the system, the happier the franchisees are. They'll buy more and they'll validate the system for new franchisees that are looking to get in.
Mm-hmm. Yeah. So, I guess it's not that different to any other year, but, at IFA this year, of course, unit economics,
Always.
unit level economics is always a big
Always.
deal.
Yep.
And it's such a core to success in franchising. So why do so many brands, especially emerging brands, and maybe some brands that have even gone past sort of the emerging stage, why do
Yep.
they still get stuck on not getting their unit level economics right?
I think there's so much information out there that when you walk the hall especially at the IFA convention in February, and you're walking the exhibitor hall, there's so much information in front of you and so many different things and technology and vendors that I think sometimes you can kind of get lost a little bit in that. So I think really like sitting down and focusing on a couple of things a year that you want to improve your system is where you won't get as lost. Like, it's very easy to say, I want to do these 20 things, but will you ever get to number 4 on the list?
Right.
So let's take the top 3 that are very important for this year. Maybe it's a dashboarding platform. We want to get good at dashboarding so we can report back to the franchisees. Well, let's vet it. Let's see how we can implement it. Let's make sure it works. Let's get the franchisee buy-in. Let's test it with them, and then let's roll it out. Like, that takes a lot of time. So now if you have 10 things you're doing, just think how much more time you need to do that. And you may just never get to it, or you may shortcut some things along the way because you want to just check things off the list. So I think really sitting back, evaluating what you want to accomplish each year and making it a realistic goal is where you're going to kind of get the most benefit.
Yeah. So it really comes down to leadership ultimately, right?
Yeah.
Yeah. So as franchise systems grow, where do you most often see disconnects between financial strategy and operational execution?
Yeah. So, you know, the franchisees have their own thoughts in mind because the franchisees are making money on the bottom line and the franchisors are making their money on the top line. So those are competing factors just by nature.
Hmm.
So sometimes people want to, roll out certain brand promotions and limited time offers and things like that. Limited time offers could be good, but remember, sometimes if you're discounting or giving stuff away, that's hurting the franchisee.
Hmm.
So really getting that kind of communication in line along the brands and having, a franchisee advisory council or some franchisees that can participate in some of these decisions, that's going to help, the system in the long run and get kind of greater alignment along like certain promotions and things that are going out there. And a lot of the big systems have that stuff in place, and those franchisees are very active in what's going on with the brand, new products coming to market, new things that need to be tested. They're very active in those areas.
Yeah, so it's like again, it goes back to what you were saying before around like the importance of data, right? Just and everybody being super critical about what the most important data is. And I guess if I were to summarize what I just heard you say, sort of unit level or franchisee profitability, in other words, bottom line, that has to be a really critical data point
Yes.
if you want the brand as a whole to scale and grow, right?
Yeah, and when your brands are looking for franchisees, depending on the type of system, there's probably, five, making up a number, say five key traits of that franchisee that are like non-negotiable.
Mhm.
Whatever it is for that system,
Yeah.
you need your franchisee to have those types of characteristics.
Mhm.
The other five, maybe it's on the franchisor to help with. Maybe they don't want to turn your franchisees into accountants. So you got to have a good accounting platform for them. You don't want to turn them into KPI readers. So you're going to create the KPIs for them. You don't
Mhm.
want them sourcing products. So you're going to have the approved product line in line for them. So all they have to do is just log on and purchase. So
Mhm.
certain things you want to make very easy for the franchisee because they don't need that. That's why they're becoming a franchisee because you're going to have that stuff in place.
Mhm.
Other things, it's we need this quality in our franchisee and we have to have that. Otherwise, they can't be a franchisee of our system
Mhm.
because of the type of system that it is.
Sure, sure. Yeah, because I mean, and I think we hear that a lot. Is any franchise brand or system is only as strong as the weakest franchisees, right?
Right.
So
Right.
and and so ultimately, they're all going to be more successful if all their franchisees are thriving.
Yeah. And it's so much communication, right? There's just so much. They're on the ground, they're in the local markets. They know what's going on in that area. The franchisor may be in the Midwest and they sold a bunch of units in New York. Well, or on Long Island, where I am,
Hmm.
different things could be going on in the Long Island region that is not in the Midwest. So let's get that feedback. Let's understand it. Let's test it. Let's go visit it. Let's see what's happening and listening to some of the things that are going on in the system.
Yeah, and I guess the note I just made now was there's obviously a very strong link between the data and the communication of that
Right.
data, right?
Right.
And the first part of the communication is like determining what the most important KPIs or data points are,
Right. Right.
and then making sure that the communication of that is very frequent and clear to everybody so that they
Yeah.
know what they're working towards.
Yeah, this goes back to kind of the traits. So instead of the personal traits, now on the financial traits. So if you're a home service type business, there's three or four metrics that are very important to a home service business. Maybe it's fuel costs, maybe it's insurance, vehicle
Hmm.
costs, right? Because you're going from home to home.
Yeah.
Those things are crucial. And as the franchisor, you know what will make a successful franchisee based on those metrics. Now, there are other things going on in that business that you can't control. Like, is the franchisee running their kids' college education through or doing lots of meals entertainment that maybe don't belong there? Like, so there are things that are outside the core business that will impact profitability, but those are things to highlight. But there are metrics for every single brand
Hmm.
that these are the metrics that will make this brand successful and will make a successful franchisee. So let's figure out what they are, let's quantify them, and let's get them out to the franchisee so they can run their business with it.
Yeah. No, it seems so simple, right?
Simple but hard. Yes,
Yeah.
simple but hard.
So, Michael, a lot of businesses focus heavily on revenue growth. How should leaders think about profitability and operational discipline alongside expansion?
Yeah, so I mean, we do this as a firm as well because we have, I have an entire franchise team, and a lot of them you've met some of them at conferences that
Hmm.
you are at.
Hmm.
They're kind of bouncing around and meeting new people, and we're very big on communication. Doesn't always work well, but we really try hard to communicate as a team, communicate what the goals are, who's going to be where, who's doing what, and
Hmm.
how are we going to accomplish those goals. And we do pick a couple of things a year that we want to focus on for the year. Because again, if we go in so many directions as a franchise committee, we're just going to kind of be in the hamster wheel and we're
Hmm.
not going to get anything accomplished. So, internally when I'm meeting with my other leaders on my team, these are the kind of things that we're talking about. And these are the kind of things that we advise some of our brands on as well,
Hmm.
is to pick what makes sense to grow revenue. Is it going to be through the broker network? Are we going to look to bring our AUVs up at our unit level?
Hmm.
Do we need new products to offer? Other brands roll out another brand because they're complementary to the existing brand. So these are all the types of strategic, decisions that leaders have to make, and then the brand level as well.
Yeah. And I guess in your experience, when they're evaluating those types of decisions, are they thinking about it from a profitability perspective or purely from a revenue growth perspective?
Yeah, so that's always changing for us too. It's like, what type of revenue do we want?
Hmm.
Does it make sense for certain revenue? And does it make sense at the brand level for certain revenue? Like those are those LTOs, right? So I was at the Restaurant Leadership Conference in April.
Hmm.
A lot of talk on limited time offers or limited time promotions. So does that make sense? Are we doing it to just drive dollars, even though there's very little profitability for the franchisee? Or are we doing it to put a new product into the market and we would just want to see how it reacts? So I think these are all things you got to kind of figure out when you're either rolling out a new service line or a new product.
Hmm.
Is it just top line we're looking to build, or is there going to be profitability here? Or are we rolling out that new service because it's a loss leader?
Correct.
And we can use that as our entry point because then we can do other things once that service has been initiated.
Mm. Yeah. Again, to your point, it's the data from all the way through, and then the communication of, okay, this might be a loss leader, but it's gonna lead to increased lifetime value with all the new customers that you acquire through that particular campaign, right?
Yeah, and you have to experiment. You have to be open to experimenting. You have to be open to testing. You used to be a little more resistant to some of that, some of
Hmm.
that stuff. Now, as the economy changes, AI and all these different things, it's like, well, maybe a service that we didn't want to provide before, maybe we can do it.
Yeah.
We can do it now, or let's test it. Let's see if people like it. And that's the same thing in the franchise community. Like, do you want to add a breakfast item? Do you want to add a coffee item? Look at all the brands adding all these dirty sodas and all this stuff
Mm.
that's going on now. I mean, like you go into Dunkin' Donuts now, there's a whole list of different types of drinks you can get now that you couldn't get 2 years ago. So they're adapting to what the customers want.
Yeah, I mean, innovation is obviously a critical thing, but and it's always finding that balance between not sort of reinventing the wheel and making sure
Yeah.
that you're being innovative. Yeah,
Yeah.
totally.
Yeah, like when I went to Dunkin' recently, I mean, I was looking at all the new menu boards. The one by my house just got fully remodeled, so it looks really nice. And I went, and all the menu boards are up there, and I'm like, wow, like you can really sit here and kind of get lost a little bit in all the new offerings
Hmm.
that they have. But that's what the kids get after school. Like they're right
Absolutely.
next to the school. All the high school kids go walk over there, and they're getting all these drinks from Dunkin' Donuts.
Yeah. And and if all the business folks get their Dunkin' coffee in the morning that hasn't changed, that works great too. So everybody gets what they
Yeah,
want. Yeah.
yeah, yeah.
Yeah. Awesome. Michael, from your perspective, what financial or operational metrics do growing franchise organizations most commonly overlook?
So let's do some of the operational ones too. So if you're at the Zor level, sold but unopened is a big one. That goes right into the FDD, and you see all these stories of 25 sold but one open.
Hmm.
So I totally understand that multi units are the way to go, and that's what people are doing. And I have no issues with that at all. But have the plan in place on how are we going to get all these units open?
Hmm.
Or do we need to renegotiate a development agreement because they got halfway through and now they need an extra 6 months to scout out some selections? So you have to be open to that as well. Just like we said earlier, open to change.
Yeah.
You may need to amend some of these agreements because you have a good franchisee in there. Well, they got 10 out of 12 done. Well, let's give them the extra year to get the next two done. So things
Hmm.
like that on the operational side, I think are very important. And building the infrastructure for the field consultants and for reporting back to the franchisees, very important. On the financial side, that can go in so many different directions. Obviously, cash flow is huge. And you hear this a lot at all the conferences. Like, what does it take to get the royalty self-sufficiency?
Hmm.
So once the royalties are covering our operating costs, that's when the magic starts to happen because now as we open new units, we can drop a lot more money to the bottom line and we have a lot more money for development, product testing and trying out new things. So
Hmm.
royalty self-sufficiency you hear a lot. So multiplying that out and seeing what you need to get there, how many units that's going to take is a very important financial metric.
Mm, yeah, really good. I like that. And just going back to your sold but unopened
Mm,
one, I, you know, I'm familiar with a franchise brand where, again, they had a franchisee who was, they bought three units, but 3 years later, they're still waiting to find the right real
the
estate.
location,
Yeah.
yeah. Yeah.
Which is another, again, to your point, are often unpredictable.
Yeah.
You don't know how long it's going to take to find the right location for that type of business.
Yeah, and in those you have also some competing interests, right? Because the franchise agreement, if it's a 10-year franchise agreement, like, did we start the clock on signing? Did we start the clock on lease
Hmm.
signing, on store opening? Like, so there's lots of different things to look at too in those types of systems because now that person is 3 years in, they haven't opened yet. Now the build out takes another whatever 6 to 12 months. So do they only have 6 years
Yeah,
on that franchise agreement?
sure.
Maybe. It depends on how it's written.
Well, I think that's another good example of a good ZOR is they're going to sit down and say, look, because in this particular scenario, the ZOR was actually the one that was looking for the real estate as well.
Okay.
So if they're not finding it, then it's kind of out of the franchisee's
Yes.
control somewhat. And hopefully
Yeah.
you'd think they would sit down and say, okay, well, let's start the 10 years
Let's just
from,
change the clock. Yeah.
yeah, exactly. Change the clock. I like that. Okay. So Michael, you advise both franchisors as well as operators. What
Yeah.
patterns consistently show up in the highest performing systems?
Yeah. So the patterns on both sides are these are operators again on the Zor or the Z side. They live and breathe the business. They are passionate about the brand. They are excellent communicators, excellent leaders. They bring other people in. Like, they know to surround themselves with people that maybe are financially more savvy than they are or better in the kitchen than they are. Like, they know how to assemble the team to help them. Like, nobody can do anything alone.
Hmm.
And I'm fortunate to have a great team around me as well. They allow me to kind of do all these things and because they know I'm going to help and support them, but they support me as well just as equally.
Hmm.
So I think the people who have the good people around them are the ones that are doing well and that structure the business the right way, kind of educate themselves on the industry, the knowledge, they're involved in the community. I find franchising that's what I love about it the most. People are very willing to help each other.
Yeah.
And when you go to these conferences and you sit down at the round tables, you're sitting next to a competitor. They're not keeping secrets. They're telling you
Hmm.
what they do and vice versa. And
Absolutely.
that's just something special about the franchise community and the people that are really immersed and involved in it. They're reaping those benefits.
Yeah. I mean, you're spot on. And thank you for saying that because I think everybody who's in the franchising space totally gets. I mean, that's one of the great
Yeah.
things.
Oh,
Everyone, like for newcomers to franchising, they're always, I think, shocked at how helpful everybody
how
is.
open it is.
Yeah,
Yes.
because
Yes.
I think everybody understands that the franchising world is successful when everybody's successful,
Yeah.
right?
Yeah. And it's huge. Like, I
Right.
mean, it's a big It's a big community. It's not a way of doing. It's not an industry. It's a way of doing business.
Yeah.
And there's no reason why two pizza chains can't talk to each other.
Yeah.
And
Yeah, and there it is, and there's also sort of this culture of abundance, right? Like there's enough units for everybody. Like
right,
whoever's
right,
interested in, to your point, whoever's willing to do the work, and whoever's a good operator and can hire the right people to run their their units or locations, and they're going to be successful. And everybody wants to see more of that, right?
yeah.
It's a very contagious thing.
For sure. And the industry stuff like the IFA, the other organizations out there, they do such a great job with the educational content, the webinars, the newsletters, the panel speakers. Like I go to these things too because I want to hear what's going on.
Hmm.
Like, yes, networking, I love to network and meet people, but I also want to sit down and learn from the people that are up there speaking and talking about what's going on in the industry right now. What are the hot topics? What's happening with private equity? Like all these types of things, they're great places to be educated.
Right. So let's dig into that a little bit. I mean, I know, you've been active like many other leaders in the franchise space. What have you felt, over the last sort of 3 months as we sort of wrap up Q2 of 2026 here? What are you seeing as kind of the latest sort of trends and excitement in the franchise space?
Yeah, so I've been to I think 6 conferences so far between January and now, and I actually just got back from the first ever fitness conference,
Cool.
franchise and fitness, which was cool. That was in Chicago a couple weeks ago,
Nice.
and it's very active. That's what I continue to see. Like a lot of them have record attendance. New people are constantly coming in. I've met a bunch of new private equity groups that I had no idea were involved in franchising because they were at the fitness conference.
Hmm.
Met new lawyers for the first time, new brands that I saw for the first time. And people just seem very excited about the franchise space as a whole. The developers seem excited. You see all the content that's constantly being pushed out on LinkedIn and other social media channels. And the conferences wouldn't be at record attendance if people weren't bullish in franchise. So, yeah, I think I'm bullish on it. It's fun, it's exciting. I think there's always a lot going on. There's always consolidation, there's always new brands coming to market. People always looking to try new things. So, yeah, I think it's going to continue. It's going to continue just because of the amount of people that are around and excited to be in it.
And Michael, I mean, just from a PE perspective, like what are some of the things that you're seeing? Because I think this was, you know, the takeaway for so many people after IFA this past February
Yeah.
about like just the growth of PE in franchising in general. Like, what do you see? You said you just met a few new PE folks that you hadn't come
Yep.
across before. Like, what are you seeing changing, and why is there so much interest from PE firms in franchising?
Yeah. I mean, a lot of it is the franchise model when it's done the right way can be predictable.
Mhm.
So if you have X amount of franchisees, or if you are a franchisee, you can kind of calculate what the expected, run rate is, what the expected cash flow is. And at the Zora level, you can scale with and get very big and not have hundreds and hundreds of employees.
Mhm.
So all these types of things are very exciting for private equity. Private equity is involved, obviously, at the franchisor, the franchisee side, and now you're seeing suppliers, franchise suppliers being rolled up, marketing companies, development companies. They're all kind of being consolidated and rolled up to
Mhm.
private equity as well. So now you have all three stools of the franchise space
Mhm.
kind of coming together. So yeah, I think you're going to see more of that in the future, and you're going to see, I think, some brands starting to go public because they've turned so many times, and what's left?
Yes.
How many more PE groups are left to take the very big ones out. So I think it's going to be exciting. You're going to see a lot of activity in the franchise space.
Yeah. No, you're right. It is. I mean, I think it's just another. It's kind of another confirmation of the value that that exists in franchising.
Yeah. Yeah.
Yeah. So, and then Michael, in your experience, because you've worked with emerging franchise brands, you've worked with sort of mid-size,
Yeah.
up to let's say 500 units, and then you've worked with franchise brands beyond that. One of the things that we're busy collecting data now for benchmarking, and there's an interesting trend that we're seeing at which stages, and we're sort of measuring it in number of units, and
Okay.
that's not, it's not an exact science because, 30 units in a home services franchise is different to 30 units in a food franchise, and
Yeah.
etc. But one of the things that we're seeing, though, just generally speaking, is that there are these ceilings that happen. Of course, most emerging brands are trying to get to 10 to start off with,
Right.
right?
Right.
But there's a lot of them that get to 10 that don't make it to 30, right? And then the ones that get to 30, there's a huge amount that just never get past 40.
Yeah.
And then those who are fortunate enough to get to 100, things are going to break again before they get to 300, etc. I'm using the rule of threes and tens. I don't know if you're familiar with that particular
No, but
model.
I'm happy to hear it.
Yeah, so it was the CEO of the Japanese company Rakuten who
Okay.
figured this out, that in all types of organizations things break in threes and tens. When you go from
Okay.
3 people to 10 people, things have to change. From 10 people to 30 people. The same thing, you can use the same thing in revenue. If you're going from 10 million to 30 million or 30 million to 100 million, things are going to have to change. And
Interesting. Okay. Okay.
so so let's just maybe zoom in a little bit on an emerging franchise that's made it past the sort of the 30 to 40, sort of, we're starting to call it something like the death zone.
Okay.
And they make it to 100, but then their systems break again. And
Right.
we're speaking specifically around like their infrastructure, their technology systems that
Okay.
drive their brand dev and their franchisee success. So they have to rebuild those systems if they want to get to 300 units. At what points do you see these things breaking, and what are the things that you see breaking at those different stages?
Wow. Yeah, and that was very interesting on the rule of three. That actually does make a lot of sense when you see it. Yeah, the so you got both sides. So we'll start with the Zor side. So yeah, as they're getting to those different levels of number of units, that's when they're trying to figure out, okay, do I need, like, if I'm the founder, before I did all the discovery days or I did all the franchise interviews, but now that I have 50, is my time better off doing that, or is it better off consulting with the existing franchisees? So I think when you get to those levels, that's when you're trying to figure out your people
Mhm.
side of things at the franchisor level. Do I need a controller? Do I need a chief marketing officer? Do I need a field consultant team? And that's going to change, just like you said, at each level of units, it's going to change, right? So I sold 40, but only two are open right now.
Mhm.
Okay, but in 3 years from now, 50 are open. So how many more people do I need to run those 50 units? On the franchisee side, you depending on the type of business that it is, same thing, you may have very high employee count. But if you signed a 25 unit development deal, who's doing all the lease negotiations and who's managing the build outs of
Mhm.
each of these and dealing with all the contractors? So, you have the actual operations of the business, but you have the setting up of the business too. So those are the areas that you need to figure out. Like, do I need a in-house counsel to read all these lease agreements, or do I need a construction manager to
Mhm.
get all these open? Some of the bigger multi-unit franchises that they have that.
Mhm.
They have construction managers, they have in-house counsel, they have real estate people scouting new locations. So yeah, as you grow, these are things you're figuring out. And do I need to come off of QuickBooks, or do I need a better CRM system? Yeah, you're
Mhm.
constantly asking yourself these questions.
Yeah. Yeah. It's interesting because a lot of the examples that you gave, which are very congruent with what we're finding as well, are because, often when a brand reaches out to us, it's because their CRM is broken, right? And they know that if they want to get from 150 units to 300 or 500 units, they're going to need a new system.
Yeah. Yeah.
But in many cases, that's not necessarily going to fix the real issue, which is, you touched on this multiple times as you were kind of walking us through that. The current leadership, at whatever stage they're in, they need to identify who the next person is that they need to
Yeah.
hire, right?
Yeah. You need the people. Yeah.
Yeah. And you need to make sure that you aren't becoming the obstacle, right?
Right.
Which is, I mean, that happens in all businesses and all industries where we become so attached to our leadership roles where we don't realize that we could actually provide more value by delegating a certain piece of that responsibility to somebody else, because that's what you need to do to scale, right?
At the conference I was at, and this exact topic came up during the lunch session. One of the founders of a brand was speaking. That's actually exactly what she said. She's like, as we were growing, I had to figure out when to fire myself
Mm.
because she's like, I'm not a president. Like, I'm not a brand, I'm the founder. and I needed to bring in a president to run the operations, and that's what she did. Like, so
Mm,
she's still the founder, and they hired a brand president. I don't know, I think 11 months ago,
mhm.
and it seems to be working out well for them. But that was one of the things she said. I needed to figure out when to fire myself
And
because I
and
was getting
yeah,
away.
that's awesome. Yeah, and do you recall how many units there were at that point?
They're over 100 for
Yeah,
sure.
yeah, yeah,
Mm,
and that's what we're seeing because in we'll often talk about emerging, being up to about 100, but what we're seeing is they're only realizing that at 120 or 130 or 140 units, they should have updated their team systems and their
yeah.
processes before they got to 100, not after they got to 100. But
There's something with that number, the 100. Like
yeah,
that I've seen lots of presentations on it. That number, the 100 is the number for some. It's I wouldn't say it's exact science, but it's very close
yeah.
to exact science. I've seen multiple presentations on calculations and the people and who needs to be upgraded, all that stuff to build to 100 units. It's something about that number.
Yeah, no, we're hearing exactly the same thing.
Mhm.
But what's interesting though is that the sort of the founders and operators that I've spoken to who made it through 100 have all shared with me that once they got to 100 they had to you know break and fix everything
Yeah,
again.
yeah,
So if,
yeah.
as long as you're growing, it's not going to last. It's not
Right,
going to last forever.
right.
And that seems to be the sort of that leadership mindset that is so critical, is going into knowing that things are going to break because we're growing, and knowing that is half the battle. You just need to know at what point you need to make those decisions that you've been alluding to all
Yeah,
along. At what point do we need to make a change here or a hire
yeah,
there or
yeah.
a different process or whatever it is.
Yeah, and some of it's investment. Like, it's tough, right? I mean, there's cash flow too, right? Like, so, like, how are we funding bringing in a brand president? Like, I mean, these are very difficult decisions to think about.
Right, yeah, which comes back
Mm,
to your royalty self-sufficiency metric.
right,
Is that going to cover hiring a president or a
right,
COO, or should we somehow borrow money to make sure we do that?
right,
Because without doing that, we're just never going to making life so difficult for
right.
ourselves. Yeah,
Right.
yeah, that's awesome. So, Michael, as we wrap up, looking ahead, how do you see technology and automation? And I know this is not what you do on a day to day basis, but just from your sort of perspective, and you attend a lot of events, you speak to a lot of people in the space, but how do you see technology and automation and data sort of reshaping financial leadership and franchise operations over the next few years?
Yeah, a couple of different presentations kind of stick out. I mean, I saw a bunch on like the franchise development side and tools that are obviously auto texting tools, auto callback tools, people searching for brands on ChatGPT and stuff like that. The brands are when you're on certain portals and certain lead gen sites, sometimes there's a lot of leads coming in.
Uh-huh.
And some of them could be bots, some of them could just be phishing attempts, but there's programs that these developers are using now to fish through that.
Sure.
So before, you still have the same one or two people there, but it was taking them 3 months to get through all the leads. But now they're running programs where they can get through all that stuff very quickly. And now those two people can focus on the good ones.
Mm,
And now we can get them closed. And now we can have better conversations because we didn't spend days filtering through the various leads that came through the portal. So I think you're going to continue to see that more on the development side. And there's also a conference in October on franchise leadership and development. My guess is there's going to be some topics on that
mhm.
because I know they were touching on that last October. On the financial side, as the brands are growing and they're onboarding franchisees, giving them a tech stack from the beginning I think will be very important. So, yeah, everybody says use QuickBooks or Zero or things like that. That's fine. But what else can we layer in to help the franchisee run the business better? So, do we need to give them part of a tech stock? Do we need a CRM up front? Do we need some type of accounts receivable tool so the billing happens quicker? You know, did we set up the dashboarding from day one? Like, why do it when you have 100? Why not do it from day one? This
Mm,
way, every franchisee, when they turn on their unit, these are the 4 tools that they're going to be using. It's a lot easier to do it in the beginning than to get everybody to implement later on. So, you
Mm,
know, analyzing those types of tools and software, and franchisors do charge tech fees. I mean, there are monthly tech fees to cover this stuff. So think about these things, especially if you're a new or emerging brand, think about this stuff from today
mm,
as to what will the franchisee need to run their business. And
mm.
let's just have it part of the stack. It's here, it's done. They don't have to think about it. You're going to train them on it during discovery days and during onboarding and during your initial training. And let's just get them used to using it from day one.
Yeah. Yeah. I really like that. I think that's really good advice. I guess, Michael, from your vantage point, how, like, would, if you had a guess, because I mean, obviously, we all just work with a limited number of franchise brands, right? But if you had a guess, how many, let's just say, of the 4,000 or 4,500
Yep.
brands that exist currently, how many of them do you think have full visibility of all their numbers from across all units? So whether they're at 30 units or 3,000 units, have full visibility from a marketing and financial, so marketing, sales, and financial perspective.
Yeah, I think it's the bigger ones for sure. So let's call it maybe the top 10 to 15%. Obviously, you have all the publicly traded
Yeah.
franchisors, and then you have the next tier that is owned by the big private equity groups. My guess would be that if those big ones that are owned by private equity didn't have it, they're doing it now
Mm,
because that's going to get them ready for the next, the next turn, the next life cycle of that business.
mm.
But I think it's easier now than it ever was.
Oh,
With
absolutely.
all the tools and products that are out there, like you can set yourself up from the beginning, especially for the new brands coming to market, because it's out there.
Yeah.
The tools are out there, the information's out there. People are writing their own code to do certain things. So I think it's easier now than it ever was before. So make that your competitive advantage
Hmm.
and set it up.
Absolutely. Yeah, that's
Mhm.
great advice. I mean, obviously we totally believe that, and we see that as well, that the tools exist. So why aren't more,
Yeah,
systems and brands implementing these tools to have that full visibility, and so that they have the predictability over the decisions that they're going to be making?
yeah,
And I think, and this probably comes back to the private equity question I asked you earlier. The private equity folks, they get the how critical that is, and they know that by just implementing those systems, they're dropping value to the bottom line
yeah.
really,
To the
really
bottom
quickly.
line. Yep,
Yeah.
yep. And
Yeah.
that is what they look at, unit level economics. They want to know the franchisees are doing well. That's how they're going to validate the system.
Yeah. Yeah.
Franchisees have to be doing well.
Absolutely. Michael, any last piece of advice you'd like to leave our listeners?
So yeah, I'm going to go back to the education piece,
Mm,
and this is for all of us. It's for all three legs of the stool: franchisor, franchisee, supplier.
mm,
Like utilize what is out there, become an IFA member, go to the other conferences that are around. There are specialty conferences that just focus on the QSR stuff. I mean, utilize the information, the webinars, the content that's out there, and be open to speak to people. Like if you reach out to these people, they're going to talk to you. Like it just is what it is in this industry, which
yeah.
is what I said earlier and why I love it so much. Like look into you and I. We hooked up at a conference and now we're talking. You're talking to one of my team members and now we're doing a podcast together. Like
Yeah.
this is how this community works. So utilize the tool, and a lot of it's free. Like utilize what's in front of you at your fingertips.
Yeah. I think that's really good advice. Just because there's so many people who know the industry inside and out, who are willing to give you advice and help
Yeah.
you and point you in the right direction. And I think, I mean, that's kind of a no brainer, not to do that.
Yeah. And when I talk to some of my other colleagues, like this stuff doesn't exist the way it does in franchise. Like they don't, I mean, yeah, there's associations for manufacturing, distribution and stuff like that, but I don't think it's like the franchise community. I mean, there's stuff going on
Yeah.
constant. Like,
Yeah.
yeah.
Yeah. No, I think that's really good advice. Michael, thank you so much for joining me today. I learned a lot, as always, so thanks so much for joining me.
No, thank you so much for having me. This is very nice of you to have me on your show.